I asked you on my Twitter which project is the best 3-year hold in crypto. So in today's show, I'll be going through all of your suggestions and talking about some projects that you guys requested updates on. I'm going to be going through the likes of Fantom, AVAX after the latest scandal, going through Verasity and some other projects as well, taking your suggestions into account and giving some much needed updates on some of these ecosystems that maybe we haven't talked about in a while. It's going to be a great show. Let's get straight into it. So I asked what project is the best 3-year hold in crypto. I had tons of responses. I had over 500 comments replying to this post, and lots of people asked about many projects. And I went through and I picked a few of my favorite projects. I even saw Invest Ounces replied, follow the data, eliminate ghost chains, the tokens of bots pump, and I only see 4 names. If you've been following Invest Ounces content, you know that his 4 names are the likes of Solana, Matic, Bitcoin, and Ethereum. I think he's a big Solana fan, a big Matic fan. I'm a fan of those ecosystems too, but I talk about them a lot, and I've talked about, I've updated you guys a lot about them over the last few weeks. So in today's show, I want to focus on some of the ones that I haven't talked about as much, and I haven't updated you guys on as much. And the first one is Fantom. We haven't talked about that in a couple of weeks. And there have been quite a few developments behind the scenes with Fantom over the last couple of weeks that I think you guys should be aware of, because some of them solve some of the fundamental issues that I have had with the Fantom ecosystem over the last couple of months. And that first one is this new Gitcoin grant. So there's basically 3 new big changes that's come to Fantom over the last 2 weeks. The first one is the Gitcoin grant that's coming in October. This is a new incentives program. Number 2 is 2 new VC firms which actively invested in Fantom. You guys know that one of my major concerns with the Fantom ecosystem was its lack of relative VC funding compared to other L1s. This obviously quells that issue slightly now that Fantom is more open to getting VCs in. And number 3 is the L2 being fully operational. I don't necessarily think Fantom needs a layer 2 to scale, considering it has been very fast and has shown that it can deal with high transaction volumes. But I guess having an L2 like the Tomb chain is only a benefit. I don't think it really can be a negative unless it diverts liquidity away from the main chain. Even so, it just helps Fantom scale. So I don't see that as a problem. I only see that as a benefit. And Fantom continues to grow in some senses. But let's look at the metrics which are underpinning the recent price action of Fantom. The first fundamental factor that has changed the game for Fantom a little bit over the last few weeks is this new Gitcoin grant. So it's a 335 million Fantom incentive program that comes out to around $100 million with Gitcoin grants, which has helped to foster ecosystem development and growth in the Fantom ecosystem. So they're going to be supporting Fantom projects, big and small, from the seed projects to the established projects, to match incentive rewards with their funding mechanism. So in the past, Fantom had a major incentives program, which was one of the reasons why a lot of developers chose to develop on Fantom initially. Now we have this new incentive program, this revamped incentive program from Gitcoin grants, which will be supporting projects. I think that's a good thing. Definitely have no issues with that. The next thing is the first VC that they got on board, which is GDA Capital. I did say in a tweet a few weeks ago that I wanted like a big one, like an Andreessen Horowitz, so an A16 or one of these other big like Jump Capital. But in the end, they did get GDA Capital, one of the smaller VCs, which is partnering with Fantom and helping fund Fantom projects, which is good. And there was also another VC that they also partnered with over the last couple of weeks. So just some moves in silence from Fantom in the background while the price has been relatively stagnant around the 30-cent mark. They are continuing to make some moves, which I'm happy about, because as a Fantom holder and someone that really enjoys using the ecosystem, I still think Fantom is one of the smoothest chains that you can actually use on the market today. I like to see changes like this because change is needed, because it's a very, very, very competitive space. The L1 space is arguably oversaturated these days, so you need to do a lot to compete and keep up with these other chains. Is this enough? Well, arguably no, but it is a start, at least for Fantom. The other thing is Andre Cronje, who obviously was one that triggered, his leaving triggered the first initial dump of the Fantom token price from around $1.16 to around the 60-cent mark. He has been slowly working on Fantom products in the background. So if we go into GitHub, which shows the active developer commits on the Fantom network, we can see that he has posted code for FUSD tokens and official F wallet features. Does this mean Andre Cronje is back? I wouldn't necessarily go so far to say so, because when I view Andre as being back, I view that as actively actively shipping code, actively developing code, actively developing dApps on chain. That is how I view Andre being back. But in the sense that, is he still working with Fantom? Yes, it's very clear that he is, because he is still working on new products. The primary product in which he is currently working on the Fantom network is the stablecoin FUSD, which has been a failure in the past when it first launched, but they are hoping to revamp this and obviously launch a successful stablecoin after we've seen many stablecoins collapse, many stablecoins also succeed. I think USN on Near protocol, after the recent changes, has done a great job at attracting liquidity. So there's no reason why FUSD can't do the same. Hopefully Andre Cronje keeps developing and keeps working with the team on future upgrades in the future. So let's just look at the transactions and see what's happening on chain to back up some of these changes in the VC funding and the incentives programs. Well, we can see total transactions have been actually pretty steady, although we've seen a significant decline in some of the other L1s. We still see Fantom transactions clocking between 700,000 to 900,000 transactions per day. There's been days when it's even been over 1 million, and there's been overall a lot of usage on Fantom. The only thing that I want to be a bit critical about is the fact that transactions don't do the most effective job at mapping user data, because a lot of the time these transactions can be ghost transactions, and there's also no way to differentiate inflows and outflows. So if someone is withdrawing $1 million from the Fantom chain, that still clocks as one transaction. And if the $1 million is inflowing onto the chain, that still counts as one transaction. So no matter if the transaction is positive or negative for Fantom, it still clocks as one transaction. And there are a lot of ghost transactions, a lot of capital washing. A lot of people want to use a cheaper chain in order to swap in and out of stablecoins. They use Fantom to do so because it's fast and reliable, which is definitely one of its selling points. But at the same time, transactions are not the be-all and end-all, but they still are a metric that we want to look at to verify whether a chain is actively being used. The TVL is probably the most damning statistic for Fantom over the last few months. I've talked about this a couple of weeks ago as well, how a lot of the Fantom dexes, a lot of the Fantom liquidity pools, farms, they relied on emissions in order to incentivize liquidity. That's a model that is now proven not to work because we want to be gearing our DeFi investments more towards projects which offer real yield, or essentially underpin their emissions based on real revenue growth. Like, for example, GMX, GNS, Kujira. Those kind of projects have proven to be a lot more solid in their models than some of these other ones that really did rely heavily on emissions. One of the reasons why we've seen this massive decline from a $10 billion TVL all the way back down to a $537 million TVL. But if we look across all chains, most chains are down significantly. Even Avalanche is down from 11 billion to 1.85. Not quite as bad of a hit, but still a bad hit. Even if we look at one of the biggest chains in Solana, that's down from 10 bill to 1.41. So Fantom has taken around twice the hit as these chains, but every chain has been hit badly because as the market goes risk off, people tend to steer away from DeFi a little bit. So on the TVL side, not great. But at the same time, the real bet on Fantom now becomes their bet on their ability to execute FVM, their ability to scale in a parallel fashion, because that is really what the Fantom team is setting out to do. They want FVM to replace the Ethereum virtual machine, to become faster, more efficient, and overall that is their goal at the end of the day, to create a single global state EVM compatible scaling beast. And if they can achieve that goal, then I do see a market need for Fantom in the market. However, it is a very oversaturated landscape right now, which is one of the reasons why Fantom never really clocks more than 5% of my portfolio. In the past, I was a little more heavily skewed. I've definitely over the last few months got that weighting down to a nice like 5-ish%. Some market conditions, some based on rebalancing, but I like sitting at around 5% because I don't see the need to be too overexposed to an alt L1 when clearly like Ethereum, Matic, the Ethereum powered blockchains are where most of the development is happening at the moment. You guys know I'm a big fan of Matic. That really looks like a chain that can exhibit extreme growth over the next few years, given the fact that most developers are choosing to develop on EVM, at least if the merge succeeds. If the merge fails, totally different scenario here, and I expect a lot of the other L1s to pump. If the merge succeeds, I guess that's just one more step to a more Ethereum dominant landscape. However, the important thing to note is that Ethereum and discarding BSC, Ethereum and Ethereum related products are constituting 70% of the total valuation, so the total market cap on the crypto market right now in relation to L1s, which is the heaviest weighting it's been in roughly 2 years. So if you are buying alt L1s right now, you are buying at a significant discount to what you would have been a year ago. So you just have to position yourself accordingly, right? Have a look at these ecosystems: Solana, Near Protocol, essentially the ones that are hedging against Ethereum's failure, and then maybe have a look at some of these other fast L1 EVM compatible chains, like obviously Fantom's one of them, AVAX, which I'm going to talk about in a second. There are a couple more, but there's many more other ones. You've got Moonbeam, etc. I essentially view them as hedges against Ethereum because I still think in 5 years' time, Ethereum will be the big winner. Matic, off the back of Ethereum's success, will be the big winner. But I do like to, I guess, hedge my bets against that not being the case, or a bet against the code being incredibly slow to ship by investing in some of these old L1s. But L1s certainly aren't the glorified play that they were last cycle. I do expect the law of diminishing returns to set in for a lot of these L1s, because it's just not feasible, in my opinion, for the similar run-ups, those 100, 200x's we saw last cycle, to occur again on the same L1s. There'll be a new bout of narratives that come in like they do every single cycle, and I'm just not sure that narrative is the L1 narrative anymore, if I'm being completely honest. Before I get into the next project I'm reviewing, make sure you sign up for a ByBit account, link in the description, if you want to trade, buy any crypto. We are still offering a $4,200 sign up bonus if you deposit into your ByBit account. Get involved with, if you want to trade, if you want to buy any crypto. There's a link in the description to do so, and it also helps support the channel. So thank you to everyone that signed up using my link over the past few months. It's much appreciated, and it helps us continue to make this content for you guys every single day. The next project is Avalanche that I want to talk about. Wow. A lot of FUD over Avalanche over the last few weeks. I did a video on my personal channel covering my take on the situation. Ran also covered it yesterday on the main show, his take on the situation. I just want to quickly gloss over maybe how this will affect the Avalanche ecosystem going forward, because there's a lot of talk about whether this is good, whether this is bad. Obviously, it's a bad thing. None of this news coming out, not only for Avalanche, but also for the space, could be considered to be a positive thing. But I guess the question is now, does that fundamentally affect AVAX's pricing in the market going forward? That is the main question. There's a couple discrepancies in the statements that Carl Roche, the lawyer, and Emin, the founder, have in their responses to this crypto leak story. And I want to just go through those discrepancies because it just paints a little bit of a muddy picture. So what Kyle did is he denied allegations of a secret pact. He said that the statement essentially confirms that the videos are real, because he did not deny the videos. He didn't say they were a deep fake. A lot of people, when the news first broke, they said, oh, it might be a deep fake. It might not be real. Well, Kyle confirmed that it was him in the videos. However, they were highly edited and manipulated, which we knew to fit the narrative that Crypto Leaks was trying to push, who are affiliated with ICP, of course. Just remember this, none of the Crypto Leaks document is the views of Crypto Banter. I'm just reading off what information I have at my disposal, and it's not financial advice at all. What you do with your AVAX is what you do with your AVAX. But the statement did confirm that it was Carl in the video, but he did deny allegations of a secret pact. But Carl's, Emma's response, the CEO of AVAX, this one line stood out to me, and he said, these claims evidently came about when Carl Roche, a lawyer at the firm we retained in the early days of our company, so he confirms that they retained them in the early days and they worked with them, tried to impress a potential business partner by making false claims about the nature of his work for Ava Labs. So Kyle Roche has come out and said, oh, the statements are highly manipulated. They've edited them up. They've made me look dodgy. They've given me alcohol. That's something he said. They tried to get him intoxicated to give out information. And then Emin has responded to this by saying that the reason he said this stuff is to try to impress a potential business partner. Just that slight discrepancy there. Carl blaming it on alcohol, Carl blaming it on edited footage, and then Emin saying he's trying to impress a business partner. This doesn't really do much to dispel the specific rumors that were stated in the videos. One thing I will state, and if you read Emin's statement, you'll see that he says that Ava Labs never directed Roche in his selection of cases. They don't receive materials or information. Roche filed all lawsuits independently, but I just find it very fishy, the whole situation. trying to impress a business partner, getting me intoxicated. Seems like a lot of weird excuses to me. And although I don't necessarily think this impacts AVAX's fundamentals, we can see, the monthly transaction count is almost at all-time highs. The daily transaction count, including subnets, is performing very strongly. The network overall looks healthy, and it looks to be exhibiting that network effect we look for when valuing L1s. It still slightly worries me, this FUD, and it does make me personally, and I'm not saying you should be as well, but it makes me personally just a little warier of AVAX than I was before. I do love the AVAX tech. I think the subnet model is very smart. I think AVAX's security is probably, and scalability is probably a little bit better than a project like Matic right now, which is offering a similar subnet or supernet structure. Not saying that Matic can't get to the level that AVAX is at. I just think that's how the landscape looks right now. But yeah, just a little bit of a cloud here, and I don't like to see this kind of stuff. It's not good for the space. Retail has already been hurt time and time again after the 3AC, after the Luna. It's just another thing, and we just don't need lawyers getting involved with these projects. It's just a bad look for the space. And ethically, there certainly are some question marks here. Not saying any of this is true. I just think there are still question marks and there's still ambiguity, enough ambiguity for me to just be a little bit wary on a personal front. But I'd be very interested to hear your thoughts in the comments below. Some people are asking if I'm still holding AVAX in my portfolio. I'll be completely transparent. I was not holding AVAX even before this statement came in. I was holding Trader Joe. That's one of the dexes on Avalanche, which I do like. Their team's coming out with a cool product soon. I've been speaking to their team. Very cool developers over at Trader Joe. I don't hold AVAX anymore. A few months ago, I decided to go a little bit more risk off, swap some of my L1s into Ethereum, reposition my DCAs a little bit. AVAX was one of the projects that I did end up selling most of. Will I get back in one day? Time will tell. I'm just going to give this a couple months to settle down, see how development activity responds, see how transactions and user counts respond to these allegations. And then over the next few months, I'll look at whether I reposition back in AVAX or not. But I'm not in a rush. I don't think anyone should be in a rush to accumulate alt L1s, given the current market conditions, if I'm being perfectly honest. The next token you guys wanted me to review was VRA. And wow, did I have a lot of requests for VRA. I had at least 20, 30 out of the 500 comments that I got. VRA, Verasity. Big community here. Big VRA community. Very strong community, which is obviously a good sign. Then again, Twitter bots are a thing, so it's hard to verify, especially these days, whether Twitter bots are the ones powering these comments or not. I assume they were real because I know this account, Sarkis, is real. So I'll give you my quick thoughts on VRA. I'm not the expert in this category, to be completely honest. The one thing that concerns me straight off the bat is the circulating supply at 10 billion versus 110 billion, because you guys know they want to incentivize creators for making content, and they want to incentivize viewers for watching content. One of the ways they will do this is through token emissions. That's my only knock on VRA as a whole, is the tokenomics. As a product, I think it's very, very good. It's going into the entertainment and gaming space, kind of like what Theta's doing, but it's doing a little bit differently, offering incentives to increase advertising revenue for creators through it's got a reward player, which it does to do this. And it actually, this is a very interesting fact, has a US patent for its POV, proof of view blockchain technology. So its consensus mechanism isn't proof of stake, it's proof of view, and it has a US patent, which is quite unique. So if proof of view can succeeds, then Verasity becomes a pretty obvious bet. But I think the jury's still out on a project like Verasity, although I do like it, and it's definitely one that I'll be looking to add to my gaming portfolio. Although it's technically not gaming, I kind of group it in with the other gaming projects. Right now, I'm not in, and I'm not in a rush to get in either, because I think that if you are accumulating with a very long-term horizon, like 2 to 3 years, then 100% invest in Verasity. Or, if that's what you decide to do, of course, if you like Verasity, you can definitely DCA at these levels. I would not shun that at all if you've got a longer term, let's say 2 to 3 year time horizon. If you're investing with a 1 year time horizon, well, now the probability of success does start to decrease a little bit, because you are going to get an opportunity likely in the next 6 months to accumulate at better prices. Now, this isn't a reason not to accumulate if you're a long-term holder, but for me, I'm not necessarily looking at adding to my 3-year bags right now. It's just not something that I'm personally considering. That's a personal cash flow consideration. That's based on other business ventures that I'm working on. That's based on cash flow in terms of investments that I'm investing in outside of crypto. You guys know I'm into stocks and real estate, not just crypto. So crypto specific investments for me, investing now with that time horizon doesn't make sense. But for anyone that's willing to hold 2 to 3 years, definitely the DCA approach for a project like Verasity can work. The next project you guys wanted me to review is Ref Finance. Now, Ref Finance is a project I actually think is extremely undervalued long term. It only has a market cap of $7 million, and it's fully diluted market cap. This is once again my knock on Ref Finance is it's still got a lot of emissions. We know that's how DEXs usually incentivize initial liquidity, but its total market cap, its fully diluted market cap, comes in at around $50 to $60 million, which I don't think is too overpriced considering it's A, the primary DEX on NEAR, and B, NEAR is a project that I'm extremely bullish on long term, and it's one of the L1s I'm concentrated the most in. I think probably after Ethereum and Solana, NEAR Protocol Pro and Matic, which I don't really count as an L1, but let's include it for argument's sake. NEAR Protocol probably comes in at 4th or 5th in terms of my L1 holdings. So I do like NEAR Protocol a lot. And if you like NEAR, then it makes sense to invest in the ecosystem. And Ref Finance is probably one of the outliers. You've got Aurora, which I think is at a very good DCA level right now. Aurora is great as well. But then you've also got Ref at that coming in at that cheaper valuation, much riskier. But it's obviously the primary AMM and DEX offering yield farming on the NEAR Protocol ecosystem. And the devs are very smart. And they also have backing from Alameda Research, Dragonfly Capital, and Jump Crypto. So they are heavily backed. We've got some pretty big VCs with a vested interest here. And we know how important that is in terms of facilitating ecosystem growth. The only thing is that it's quite a small raise. This round was 4.8 mil. For Alameda and Dragonfly, that's peanuts to them. They invest hundreds of millions at a time sometimes. So 4.8 mil, not a huge investment from Alameda or Dragonfly, but it's still not one we can turn a blind eye to because it does have the backing there. So it does have the connections and the support to foster some nice growth. So I like Ref. I think we probably want to wait for this token release schedule to iron out a little bit. If we look at liquidity incentives, which is the vast majority of where the emissions are coming from, as I said, they incentivize with those higher APRs to get people in, not a sustainable approach long term. So if I'm looking critically, we probably want to wait for this year 2 vesting schedule to tick over, which is that 18 extra percent release, which is happening between now and February next year. That it will be a huge release onto the market. And then it starts to drop off significantly because year 3, only 11% release, year 4, only 5% release. So then the question becomes, if let's say we can aggregate the total releases at, let's say 15% a year, does it make sense to invest now if they're still going to be emitting tokens? Well, the question comes down to, do you think the Ref Finance price can outperform the amount of supply that's coming onto the market? AKA, do you think demand can outpace supply growth? So if you think Ref is going to go up more than 15%, which is the aggregated year 3 and 4 liquidity incentive amount, it's actually 16.7%, then it makes sense to invest in Ref. Because if you think it'll outperform by 16%, it's offsetting the potential growth in supply. Whereas if you're investing now, on year 2, because that's the current year we're in. I think we're at the end of year 1 right now, because it launched roughly like 10 months ago. Then you have to look at the year 1 and year 2 release schedule, which is currently sitting at 43%. So 43.3% release schedule, that is a lot, because that assumes that over the next year and a half, Ref Finance can offset that by 40%, which is in order to be profitable as an investment. Coming up against other headwinds, like the tough macroeconomic environment, like Bitcoin's next cycle, which is in 2024, presumably, given that's when the next halving is, then it's pretty hard to deploy a significant amount of capital for me in Ref Finance right now, because there still is this big year 2 cliff. But I still think if you don't have initial exposure, potentially DCAing into Ref Finance, even given the the supply increase yet to come is not a terrible idea, because I do think it is a project that's fundamentally undervalued, and there's just a little chance, there's always a small chance that it ends up running even notwithstanding the emissions that are yet to come, because we've seen that happen before. If a project launches a new product or that there's hype around a certain narrative, it can run regardless of emissions, guys. But yeah, I'm just kind of waiting on this personally from an accumulation perspective, but I will take a little nibble. I think probably the easiest way for anyone to do this, if you're confused, is this. 90% of your investment into the NEAR ecosystem goes into NEAR. 5 to 8% goes into Aurora. If you want to be a little more risk on, you can go 80% into NEAR, 10% into Aurora, 10% goes into Ref Finance and other ecosystem projects you're bullish on. That would be a relatively risk-off way of accumulating. So let's say you DCA $1,000 a month into NEAR, you put $800 into NEAR itself, you put $100 into Aurora, and you put $100 into Ref Finance. That DCA approach is going to give you the best of both worlds. It's going to give you the upside of the NEAR ecosystem and the extra additional upside from a Ref Finance if it does succeed. It's a project I like, but yeah, just keep an eye on this release schedule here. The next project that I saw was pretty highly requested, and even in the comments, some of the earliest comments, wow, I got a $10 suggestion here. I will review that project because you gave me $10 just before I get into AZERO. HEX. Review HEX. Is it really worth the $10 for me to review HEX? I don't like HEX. I don't like, and I've been open with this with Richard Hart. In fact, I've been involved in multiple Twitter spats with Richard Hart over the last couple months. But I just reckon HEX. Look, it's everything that DeFi shouldn't be, in my opinion. It's a harsh statement, but I'm sorry. I just can't do it. I just can't do it. I could get real technical and give you the reasons why I don't. Essentially, it relies on people locking. It's essentially operates in a kind of like a pyramid model, because people that locked early on, they're locked in for many years, which reduces the supply pressure coming onto the market. That then increases the APR, which is used to incentivize new people to get into HEX and stake HEX, which results in this snowball effect of everyone's just locking the damn token up. So of course it's good for the price. And that's not even true, by the way, because the price has dropped. But it essentially operates on a pyramid scheme level. Also, even if you disagree with the pyramid scheme thing, like Richard Hart does, then here's my other question to HEX holders. If it isn't a pyramid, and if the tech's great, and if it's the future of DeFi and the next Bitcoin, etc., then why is doesn't Richard Hart devoting this much energy and attention to PulseX slightly worry you? Doesn't Richard Hart's devotion to Pulse Chain, because that's where the narrative's going, slightly worry you? Like maybe when Pulse launches, his attention's just completely divided and he doesn't talk about HEX as much. I don't know. By the way, George, if you're watching this, I know George does the timestamps. Please put HEX in the title, or Paola after this. Put it in, just replace ADA with HEX, because like that. I think we'll get in a few angry HEX commenters if they watch this section. I'm happy to discuss this with Richard Hart. The problem is, although I consider myself to be a smart person, I think Richard Hart just has the edge on me in a debate. I don't know what it is. He's a very, very good debater. He seems to be able to spin any argument in his favor, irrespective of how clear and concise your logic is. So I worry, despite, I used to do debating in school. I have a public speaking background. I just worry a little bit. I just clicked something on my Google. I just worry a little bit about Richard Hart's ability to manipulate the argument. So I might steer clear of a public debate. I don't know if that's the scaredy cat thing to do, but I don't know. He'll just find a way to manipulate it, and it bloody annoys me because I know my logic's better, but he'll just win. Really super annoying. Anyway, AZERO, which is the next one I plan to talk about, but I'm glad that HEX thing came up because I get some ranting out of my system. I actually do like AZERO, so I had a comment in response to my 3-year hold. I had 1,000 comments now. You guys have gone nuts on this post. Nuts. Almost 200,000 impressions. That's impressive. Thank you guys, everyone that commented. Make sure you follow my Twitter if you're not already following my Twitter. This guy said, I like AZERO, my only bag that isn't Bitcoin or ETH, 70% staked. This is actually, I'm just going to pause it right here. This is the main reason I like AZERO. 2 reasons, actually. 70% of the total supply is staked because 90% of rewards are given out to validators. So 90% of the staking emissions are given to stakers directly. That's a huge amount, something we haven't seen replicated in many other token models. One of the reasons why AZERO's relative strength has been amazing. Look at this chart, guys. Does this look like a weak chart to you in a bear market? That's got to be, apart from BNB, that has to be the strongest chart that I've seen this bear market. From its highs of $3, it's only down like 65%. By the way, Fantom's 90%, AVAX is 90%, Solana's 88%. All these other protocols are down almost 90%. AZERO is only down 65%. And it has not dropped given this recent like this thing's just, I don't know what is with AZERO. It's literally immutable. It's unbreakable. It's bulletproof. Every single time the market dumps, AZERO doesn't dump. And that is off the back of very smart tokenomics, which is what impresses me. The major question with AZERO is, can they accrue developers? Can they accrue users in a very competitive L1 space? A couple competitive advantages they have. The first one is their tech stack is very strong. It's a unique stack. And the second one is that it's privacy focused. I think privacy is a big narrative. You've got Secret Network, which is very strong, as well as Aleph Zero. I prefer both of them to Monero. Rose also has which I do like, has a focus on privacy. AZERO might be my favorite out of the three, just because its tokenomics are very strong. And it's funny because CoinGecko doesn't show the tokenomics, but you're basically rewarding validators. And I think the cliff is fairly good. I can't remember off the top of my head. I'll see if they have it here. No, they don't have it available. I don't remember off the top of my head, but I did look at the stats a couple of days ago, and I remember being impressed by the tokenomics. So AZERO, I do like it. It's a privacy L1. It's probably I mean, everyone should have a privacy, in my opinion, section of their portfolio. Not financial advice. So I have a little privacy section that probably constitutes, off the top of my head, like 7% of my portfolio. And AZERO is one of them. I'd also consider, probably before the Tornado Cash crash, Tornado Cash. Even now, I still think buying Tornado Cash could potentially still be an okay play, just because the project itself is very, very strong. But then you've also got Rose and a few other privacy Secret Network protocols, which I do like. AZERO comes under this category, and it's one I definitely wouldn't fade. So just have a look into it, see if you like it. As I said, the real question is whether they can accrue users, given how competitive this landscape is. Because although it's a great project, more going after the enterprise solution, so working with businesses, it still does rely on mass adoption, like any of these projects does. So yeah, and they've got some big updates in their monthly update. They had their testnet validators running in full speed. They had a smart contract announcement a couple months ago, so their smart contracts are finally deploying. Relatively early stage protocol. It's not it hasn't really been to market. Smart contracts were only announced a couple months ago. It's not like AVAX or Fantom, which have been active for a year. It's relatively new, so I think proof will be in the pudding with AZERO, for sure. And the staking ratio of 73.5% is pretty massive. I think that does show the conviction that believers have in AZERO as a whole. That is a very large amount to be staked. I think Fantom's roughly 50% for comparison. Ethereum's getting up there, but it's not quite 73. So 73 is pretty damn impressive. 73 is pretty damn impressive from AZERO. So consider me impressed. Yeah, cool. Well, there is more projects I have to review, of course, because I had 1,000 comments. So many projects, and I could probably spend an hour giving you my thoughts on all of these. But I think if you do want me to give that extra hour, then the easiest way is just to go over to Instagram now and do it over there. So if you have any projects that I didn't get time to review, someone just sent me £9 for Saitama. Sorry, man, I don't have too much of a strong opinion on Saitama. I think it is, I don't know, it seems a little bit memey to me. It's not my favorite project. I once again, though, don't fade the power of community. I think community is a very important thing in crypto. It certainly has the religion. It has the community. Project-wise, I'm not that clued up. I'm not necessarily a huge fan, but maybe I'm wrong. If you want to explain to me why you're bullish on it, you can give me some thoughts. Maybe DM me on Twitter. Let me know. And I can check that out later. But yeah, for all the others, come hang out with me on Instagram. I'll answer any projects that I didn't have time in today's video to go through. And I also follow some of you back as well. You can see I'm following a few of you now that follow me as well. So yeah, I'll see you over on Instagram. Have a lovely day, and I'll catch you tomorrow. Peace out.